Good evening, everyone. My name is Leonard Abramsky, and I'm welcoming you and happy to welcome you to the Now You Know webinar on Insurance 101, which is co-hosted by both UJA and the Jewish Federation. Tonight, we're honored to have a real panel of experts who are involved in the insurance industry from all aspects of the insurance industry. David Brown, who's a longstanding and active member of our Professional Advisory Council, Jeff Gottesman, and Leah Clave, and moderated by Mark Halperin, the chair of the Professional Advisory Committee, the PAC. They're going to be discussing some of the top questions in insurance and pension-related industry issues. They'll be covering topics including life insurance, property and casualty, as well as pension plans. And I'm sure this will prove to be most interesting and most informative and hopefully reassuring, and be able to provide some answers for you for questions that will allow you to better sleep at night, given the times that we're all facing. Know that your family are protected, especially in these challenging times. What I'd like you to do later on is there is a chat function, and Mark will remind you again, but we'll remind you to post your questions to the chat line down below, and they will answer your questions in appropriate time. First thing I'd like to do, though, is tell you about a little bit about the Jewish Foundation for those of you that are unfamiliar with it. Jewish Foundation is a community foundation that makes charitable giving a lot easier and allows you to fulfill your philanthropic needs through the Jewish community and on behalf of those both in the Jewish and non-Jewish community. It presently represents over $400 million in investments professionally managed amongst community members, and allows those the returns on those to go towards fulfilling charitable commitments for both, as I said, the non-Jewish and Jewish community, and obviously especially our Jewish community within the UJA. The other point of the Professional Advisory Committee itself is that it works with professional advisors in our community and allows them to understand better the needs of the Jewish community and as it relates to the foundation, and allows individuals to fulfill their philanthropic needs through the Jewish Foundation. I'd like to at this time thank our presenting sponsor, Equitable Bank, as well as our webinar sponsor, wealthinsurance.com, who are, I guess you're the chairman or the president, Mark, I'm not sure what the title is. This is Mark's company, and he's been very generous with both his time and his money in supporting our organization. I'd like to also thank all of our sponsors, our corporate sponsors within UJA, for sticking with us during these times, especially in the last few months of what all we've faced. I'd like to take a brief moment to talk to you about what the UJA campaign is all about this year. It is a campaign that has been completely pivoted given the times that we are facing. I am proud to be co-chairing this campaign this year with my friend Sarah Zagansky. Normally, we are a campaign that raises approximately $60 million to fulfill needs within the Jewish community in Toronto and all aspects of the Jewish community. As a result of the emergency pandemic we're facing, we had to pivot our campaign, and we are now looking at raising $85 million, an additional $25 million. And our community has stepped up, as the Jewish community in Toronto always does. And in the last 55 days, we have raised just over $54 million. So I'm very, very proud of the efforts that have taken place so far. But as I tell the team all the time, we have another 31 million to go, and that's what I'm focused on. So if those of you that have not yet thought about giving towards the UJA campaign this year, can reach out to any of you UJA professionals and have that conversation. We certainly would welcome it. The community certainly needs it. And these are, I promise not to use the U word of unprecedented, so I'd say that these are very unique times. This time, what I'd like to do is introduce our moderator, Mark Halperin, who I mentioned briefly before. He's the managing partner at wealthinsurance.com. He's regarded as one of Canada's top life insurance advisors, and is also chair of our Professional Advisory Committee. And with that, I will turn it over to Mark. Enjoy the seminar. I know you will learn a lot. I'm sure I have a lot to teach you, and I appreciate your time this evening. Thank you very much.
Leonard, thank you very much for that wonderful introduction. And thank you, more importantly, for all the work that you and Sarah Zadansky are doing as co-chairs of the campaign. I'm sure in your wildest dreams when you accepted this position, you had no idea that there'd be some global pandemic that would sort of just rock our worlds. So all the more reason why we are so in need of solid leadership. And we really appreciate you stepping up to help us all. and welcome everybody to this event tonight, Insurance 101. Woody Allen says the only thing worse than death is spending the night with a life insurance advisor. So I know that is always sort of draws some, so hopefully everybody here is actually going to have an informational evening that's going to be educational and can be humorous too, but at the same time answer a lot of your questions during a time when we're all really seeking wisdom and knowledge. As Leonard said, our company, wealthinsurance.com, I'm also a trustee at the Jewish Foundation and the chair of the Professional Advisory Committee. And I just want as an introduction to say that it seems like it's taken a global plague for people to suddenly realize that they might die and get sick. We've been trying to convince people of that for, decades, but they don't believe us. And then all of a sudden something happens and we're clearly in a situation where people are much more aware of their mortality and also about their incompletions, things that they haven't done, like making sure they have up-to-date wills and powers of attorney, making sure that they have an estate directory, making sure that they have up-to-date insurance, and also making sure that all the small print on things they take for granted, like their health benefits, their pensions, and their property and casualty and liability coverage, really is going to be there when they need it. So I will just add just one plug that at least on the life insurance side of things, the insurance industry has provided some benefit in that they've relaxed underwriting rules for a limited period of time where people can now get up to $2 million of life insurance with no in-person meeting, no medical, and all in a very short phone call, providing you're healthy and a non-smoker. And I think that's something that people should be aware of because people are topping up their life insurance because of markets dropping down or because of their value of their assets going down, or just to make sure that they're insured and insured going forward. So please reach out to your own insurance advisor or contact any of us, and we'd be happy to help you and your family. Today, we're fortunate to have three distinguished leading professionals answer some of the questions that everybody has. I kind of call them the elephants in the room, those types of questions. Now, just very brief bio. We have David Brown, and we have Leah Clave and Jeff Gottesman. Their bios have been provided for you in advance, but I just want to give you very high level on each of them. And then the program format is each of our panelists are going to just go to give an overview on what's happening in their particular sector and what challenges have come up in this time of COVID for themselves and for their clients. We're then going to go into a question and answer for about 5 minutes with each of our panelists. And there, as you know, there is a chat function that everybody has on their webinar where if anyone has any questions, we please suggest that you complete that, throw in your questions, and at the end and along the way, we're going to be taking those questions and having our panelists answer those as well. And then we'll wrap it up at the end with some final questions and thoughts before we hopefully get you out of here before 9 o'clock. So we'll start off with David Brown. David Brown is certainly one of Canada's foremost experts in the use of life insurance for estate planning and charitable giving. He's a third-generation partner of Algie Brown and Associates, and he's no stranger to our community. David's been helping our community from the very beginning of his career, having served as president of Associated Hebrew Schools, the Ontario chairman of State of Israel Bonds, as well as a trustee of the Jewish Foundation, and a recipient of the Professional Advisory Committee Advisor of the Year as well. David and his wife Helen have two wonderful daughters. One of them, Sarah Brown, is also very involved with the foundation and is involved in the business as well. And they have two beautiful grandchildren. Our second speaker is Leah Clave. Leah is a highly regarded professional with experience in retirement tax and estate planning. She works with accountants and lawyers and actuaries and business valuators, as well as high net worth clients. She has a company that she founded in 2016 and has had years of experience working in wealth management, taxation departments with KPMG, Deloitte, Touche, and Arthur Andersen, and the pension and benefits industry. And Leah is going to help us advise on a range of retirement and pension questions that you might have, including individual pension plans, and hopefully she'll be able to give us some great insights. And Jeffrey Gottesman, finally, has spent the last 16 years working for Gottesman Insurance Brokers, which is also a third-generation property and casualty insurance company started by his late grandfather upon immigrating to Canada after the Holocaust. Jeff's also committed to the community, to a number of Jewish causes. He's the co-chair of UJA's Genesis Support Pillar. He currently sits on the board of the House, as well as CJ PAC's advisory board. And Jeff is married to his wife, Samantha, and they have 3 children. So that's the introduction. Please remember to fill in the bottom if you have any questions. What we'd like to do is we'd like to start first with David Brand, who can just give us an insight in terms of the life insurance industry and what's happening there in light of COVID. David?
Great. Thank you very much, Mark. I really appreciate being invited to participate in this panel, and I'd like to invite or welcome everyone to my dining room. I understand that these are very laid-back webinar sessions, so please grab a glass of wine or a cold drink, and we're just going to have a discussion for the first few minutes, and then we're just going to answer some questions. I have to provide you with our disclaimer that all of the answers that we're going to be giving you tonight are general in nature, and I would recommend it if you have any specific questions that you check with your own advisor or directly with the insurance company. If you have some challenges and you are unable to get questions, I invite you to contact our service department, and we'll try to help you out. I'd also like to thank Sarah and Leonard for their work that they're going to be doing and are doing with the campaign. So far, extremely successful. And thank Renee Holtzman and Brett Henry for inviting me to participate. So what I want to do is to start with a comment about the solvency and the position of the insurance industry in Canada, and actually in North America and around the world. In Canada in particular, life insurance companies are over 100 years old. Canada Life, the first company that was federated, legislated in Canada, was founded 173 years ago in 1847. So much of what is going on now is significantly important, but is really a blip in the life of an institution like a life insurance company. And frankly, it's a blip that is not so much unexpected. And one of the major questions that we've been getting from time to time is, well, how do we know that the insurance companies can survive throughout this pandemic? What sort of type of protection do we have as individuals, and what type of monitoring is there of the life insurance companies? So I wanted to talk with that because I wanted to provide a little bit of peace of mind. The life insurance companies, like all financial institutions, are monitored by the Office of Superintendent of Financial Institutions, OFSI. And it's OFSI's obligation to check and to make sure that those financial institutions are secure and are able to match the promises that are made to you by them. And it is for that reason that OFSI gives them the authorization and the ability to sell certain products, but the companies also have to report to OFSI on a regular basis about the status of their solvency and the status of their ability to pay out their life insurance claims. So there were many different types of methods of measuring life insurance companies, but in January 1st, 2018, a new method came about called the Life Insurance Capital Adequacy Test, and LICAT for short. And basically what this means is that in periodic principles, no longer than every year and generally on a quarterly basis, the life insurance companies have to report to OFSI what their LICAT ratio is. The LICAT ratio ranges, actually the maximum ratio that they need companies to have is a 90% ratio. Over the past year, the insurance companies in Canada have actually increased that ratio. They've done better than they have year over year and last year. And they're, depending upon which company, somewhere between 120 and 170%. So, and you can find this information on the website as far as the LICAT measurement of the insurance companies. So we are not concerned right now as far as the life insurance companies with reference to their solvency dealing with life insurance. The other piece that's important is to know what your individual protection is. So you are protected under an organization that's called Assurance for life insurance products. Assurance is an independent, not-for-profit life insurance organization that is funded through the various insurance companies. And so basically what they have said is that if an insurance company goes insolvent or goes bankrupt, that they will pick up the obligations of that insurance company. And the maximums right now for Assuris, and I welcome you to check their website, it's ASSURIS, is 85% of your life insurance plan for any amount that's over $200,000. So for example, if you have a life insurance coverage plan that insures you for $200,000, you're covered for 100%. If you have a life insurance contract that insures you for $1 million, you are protected under assurance for $850,000. And these are the same ratios as it applies to health coverage, as it applies to your annuity contracts, as it applies to your cash surrender value. 85% of your amount, which is protected under Assurance. So the point that I wanted to get across to you this evening in the introduction is the fact that there is legislation, there are monitoring agencies, federal agencies that are checking into the solvencies of the life insurance companies. And aside from that, there are also personal protections for each and every individual that deals with a life insurance company on one level or another. Insurance companies basically work on three variables or assumptions. That's interest, mortality, and expenses, sorry. So the major three things, if you knew what interest you were going to be earning, if you knew how long you were going to live, if you knew how much your expenses were going to be, you could be the insurance company. And basically the insurance companies take these three factors and they combine them together. And by combining them together, they come up with a number, and that number is called premium. And that is the way that they calculate your premium. They know how many people are going to live from year to year. They don't know who, but they know how many. They know what their expenses are, and they know what interest rates are going to be or they predict what interest rates are going to be on a long-term basis. The one major effect of the insurance companies on their pricing is really interest. It's not mortality. The fact that unfortunately, very unfortunately, hundreds of thousands of people are likely and will pass away from COVID will likely not affect the insurance company's ratings or the insurance company's solvency because of the fact that the majority of people, unfortunately, who are passing away are older and do not have large amounts of insurance in order to affect the companies. On the other hand, the things that will affect the companies more will be the interest rate exposure and low interest rates for a long period of time. Having said that, the insurance companies also project their interest rates in order to match their liabilities over decades. And their interest rates that they have projected are lower interest rates because that is what primarily is what's happening today. So the purpose of this sort of introduction is to let you know that based upon what we are seeing today, both in Canada and North America and internationally, that the solvency of the insurance companies is not an issue, that the life insurance solvencies of the insurance companies seems to be in very good spot, and that you as individuals have Assurance protection through all of the companies for any of the contracts that you have contracted with through the insurance companies at this point. And COVID and the virus have not changed those factors whatsoever. They have always been there and they existed to be there. So I'm now going to open it up for questions. Mark.
Thank you. I appreciate that very, very much, David. What we're going to do at this point, we were going to hear from each of our panelists. But we'll start off. Let's start off with you at this point. Just ask some questions on the life insurance side. It seems, David, that a lot of people, we're blessed if you're working still or you're receiving benefits from the government in terms of just being able to sustain your lifestyle. There are people, though, unfortunately, who can't afford to pay their premiums, let's say on their life insurance or their critical illness or their disability. Are there any concessions right now being offered by the companies in order to be able to provide some relief for those people?
So the answer to that question is yes. They vary from company to company, but on a standard, on a general basis, these concessions apply to life insurance policies, critical illness insurance policies, or disability insurance policies, whether they are corporate or whether they're personal. And if anyone is affected with an illness or if anyone that goes into a quarantine, or if anyone has been in a layoff, either temporary or permanently, or if anyone has to take an absence in order to take care of family members as a result of COVID, all of these concessions apply to those individuals. The concessions range from a 60-day deferral to a 90-day deferral of premiums that might be due during the period of time between, broadly, March the 15th and, as it turns out, July the 1st. We are waiting to hear whether that is going to be extended by the insurance companies. So basically, if you have a challenge, or if you are in one of those positions where you cannot make your premium payments, you are eligible for a deferral of the premium payments for a 90-day period of time.
Very good. So that's good. That's good and reassuring for people to know of. Let's say somebody's been laid off from work, though. What happens, let's say, if they were to become disabled, God forbid? You know, they're not working and perhaps they've got some benefits like a disability policy or something like that. What would happen if they became disabled? Would this be an eligible claim at this time?
Well, the answer to that question depends upon the type of layoff. If it is a temporary layoff, then standard contracts, standard provisions do continue coverage for a temporary layoff up to a maximum of in general 120 days. You need to have a fixed recall date. So the insurance company needs to know when you are expected to come back, and it is on a premium payment basis. So premiums will continue to be paid during that period of time. So if you are on a temporary layoff and if you become disabled, yes, you can claim, and as long as you qualify, you are covered. If you're on a permanent layoff, it's a different story because you don't have a recall date. In general, you will be covered for certain benefits under your healthcare plan, but you will not be covered for disability benefits if you are on a permanent layoff and you have no recall date.
Okay, great. I'm assuming clearly if somebody dies due to COVID, God forbid, they would be covered on a life insurance claim. Would they be covered on a disability claim or a critical illness claim if they were to get COVID?
So the answer to that with reference to life insurance and disability is yes, as long as you qualify for the definition. Life insurance, it's pretty straightforward if you're dead. But the disability, you have to make sure that you qualify. If you qualify, whether it's a COVID claim or whether it's not a COVID claim, if you are unable to do your occupation, or depending upon the definition of any occupation, it is claimable. As far as critical illness, CI, COVID is not a claimable illness under the critical illness contracts. Mark, you know this answer even better than I do, I am sure. On the other hand, if you have an illness that's as a result of COVID, so let's say, unfortunately, you've got COVID and you have some strategic or some byproduct, like a failure of an organ, which is covered under the CI contracts, then that would be a claimable claim through your CI contract.
Okay, great. Just two more questions for you, and then we're going to move on. You know, people are concerned if they do get COVID. And let's face it, our city, thank God, we've been very fortunate compared to, you know, let's say the Jewish communities in New York. But if somebody does get COVID, and it seems like, you know, if you're young, you recover from it, how would that impact you for qualifying for future insurance? Would it be something that would disqualify you from being insurable?
So the quick answer to that is no, it does not disqualify you for not being able to purchase additional or to purchase insurance. It depends upon whether you were hospitalized. If you weren't hospitalized, then generally the companies will want to wait for a month or so to make sure that there isn't any reoccurrence or any other side effects. If you were hospitalized, they generally will wait for 3 months. It all depends upon the severity and whether there is any additional side effects of the illness of the virus. But certainly, this does not disqualify you being able to buy life insurance.
Beautiful. One question I have that people have asked. Again, nobody's traveling too much lately. We're all sort of at home. But you know, could you still travel at this point in time? Let's say you had some simcha or something in Florida or New York. Would you still be covered or insured for your coverage here in Canada if somebody, God forbid, would get COVID outside of the province of Ontario?
Okay, it's a good question. Unfortunately, it has a Talmudic answer, which is it depends. It depends upon where you are going. It depends upon whether there was a warning from the Canadian government telling you not to go there, and it depends upon the insurance company. So in general, however, the answer is yes, you are covered through your plan if something happens to you while you were traveling. But I would be very careful. I would make sure that you make the telephone call beforehand to your carrier and that you get written confirmation that you will be covered if something happens to you and or if you contract COVID in another jurisdiction than the one where you live in.
Perfect. One last question. Let's say somebody has term life insurance and they don't want that term policy to be canceled or renew at a higher amount, that they really do want to hold on to that insurance for their family. What options do people have for term life insurance to make it something that they can actually keep as opposed to it renewing or expiring?
So there's a couple of other options aside from the deferral option. There is a deferral option that you can defer for 90 days, either on a monthly basis if you're paying monthly premiums or annual premiums. There is another option that's offered by one of the companies, which is a reduction of your term insurance contract. So if you have $1 million of term insurance and you want to be able to afford to continue it, and you're not going to apply for the deferral, because again, the deferral is a deferral. It's not, they're not, you still have to come up with the premiums. You can reduce the face amount by 50%. You can pay the premium for 50%, and then after 90 days, that amount of coverage will go back up to the level that it was initially, as long as you request it. If you don't request it, then what happens, it'll stay at the 50% level. And if in 120 days you want to increase it back up, then you'll have to go through medicals. So there is this reduction provision that's being allowed for people in order to try to manage during this period of time.
Great. And clearly, if people can afford it, people should know that they can convert their term insurance, any amount, all of it or a portion of it, into permanent insurance without any medical evidence required. It would just be based on whatever the cost and of their age is at that time of conversion and the product. So that's certainly something that people should take into account as well. David, thank you very much. We're going to have some more questions for you likely at the end. We'd like to move along now, though, but thank you very much for those important insights. I'd like now to turn your attention to Leah Clave, who is going to give us a 5-minute overview or less on sort of the pension sector, and then we'll rapid fire her with some important questions that are on everybody's minds. Leah?
I'd like to begin by wishing the foundation much success with its campaign. I know a lot of people face challenges at this time, but please, we all have to give to these good causes, and the foundation is a fabulous cause. And I'm also pleased to have been invited to be on this esteemed panel. In the pension space, which is what I spend most of my time advising in, I deal with two sets of clients. One would be the small companies who set up the individual pension plans and is the IPP a suitable issue. And the second space that I am in is people seeking advice on pension commutations. And I do have to say that with COVID and declines in investments, all of a sudden people have begun to give thought to, will I have enough in the way of funds to make it to the end of the day? I'm a big fan of Moshe Milevsky, and he's got his latest book is on longevity. And what was fascinating, he actually said it was the Spanish flu in 1917 that gave legitimacy to life insurance, and who died would have been the young people, not the old people. Age 28 was the typical individual who died. So while I focus on longevity, having an estate and dealing with people at the end of the day is significant. So what's happening in the pensions plan space? Plans have taken a hit. When I look at the fiscal statistics, at the end of 2019, on a solvency basis, the median solvency was 99. Q1, the median solvency was 85. When we look at how many plans the end of Q1 2020 would have been fully funded, it's 1 out of 7. I do believe, like David, that this is a blip, that while we may have shaky times, we don't know when it will end, that most plans will be coming back. But I would counsel anybody when we deal with widely based plans as to what business is the company in. Will it be the company that has the ability to come back? Because initially, if I belong to a pension plan, I look at how well is the plan funded, because what is in the plan can only be used to pay benefits. But if the plan doesn't have enough in the way of assets, the next question is, does the company in fact have the ability to fund the plan? So I think each of us who does belong to, especially the widely based pension plans, needs to give some thought to what is the funding level of the plan, and is it a business which will come back post-COVID? I'm an optimist, but I think some people do need to be cautious. And just the last comment that I was going to make was, with investments doing what they have been doing, all of a sudden I'm getting a lot of questions on annuities, because people have been saying, I feel less confident about my investments, and at the same time I want lifelong income, and the annuity is an investment that will meet that end. So those would be my high-level comments. Do I now take questions?
Leah?
Yes.
Thank you. I appreciate that. As you can see, I had to exit stage left. I'm in my office, and of course, all the lights went off in the building for energy savings, so I thought I didn't want to be in the dark. So, Leah, thank you very much. Look, people are clearly concerned about the markets, and are their pensions safe? You know, their liquidity, you know, everything's going to rebound. Is there anything people need to do now, though? Is there anything that they should be looking into in terms of the fine print regarding either their defined benefit plan or their defined contribution plan, or their individual pension plan, their IPP?
Well, let's begin on the IPP space. Most individuals who have set up IPPs would be individuals who own small businesses. And in the back of the mind is, when can I claim that capital gains exemption? And we do know, to claim the capital gains exemption, you need to meet specific tests. One is, at the time of seeking to claim the exemption, substantially all the assets need to be in an active business. So all of a sudden, if somebody's got passive assets on the balance sheet and the value of the business has declined, they may be off. So anybody who's got an IPP with a thought to ultimately claiming the capital gains exemption needs to be mindful of, will they be on side at all times? And if somebody does in fact have an existing IPP, then, and have had a dip in the valuation of the plan assets, then now would be a good time to have a valuation done and put additional assets into the plan if that's the wish.
Great. What about somebody who's an employee, and let's say COVID has made their position expendable, and they're now terminated? Clearly, there'd be some sort of, you know, package for them, and they belong to a defined benefit pension plan. What should they be doing? Because this is happening.
It depends on the age of the individual. Many individuals would be keen to take a lump sum equal to the value of the benefit out of the pension plan, but not all individuals can do that, and that is in fact age specific. So a lot of people have no choice but to leave the assets in the plan. And if they would be of an age that they could in fact commute, then the decision is one of, is commutation the best thing to do? And it's about a dozen issues that need to be looked at in a situation like that.
Okay, great. And, you know, look, there's been a lot of silver linings in COVID. I know I spent 90 days with all of my 5 kids, and, you know, I didn't think that was going to happen again so quickly, but it was wonderful. At the other side of it, unfortunately, there are also people spending too much time together, and there's an increase in family law around divorce and separation, unfortunately. Mm-hmm. So, you know, we're seeing that as well. And one of the questions we have is, can somebody have the funds from their pension plan actually, can they have the funds from their pension plan since they have no retirement assets of their own? In other words, you've got a spouse, you've got the pension plan, you want to keep those assets as opposed to giving them to your ex-spouse. What's the procedure?
Okay, so a spouse would be both a common law spouse and a legal spouse. A pension is a family asset, so evaluation does need to be done. The good news is that in 2012, new laws came into place new family laws, and now we have a specific methodology that must be followed in valuing the pension, because up until that time, the two sides got into lengthy disputes as to valuation methods. But now you have a fixed valuation method as to how will the plan assets be valued. It goes on the family balance sheet. It goes on the balance sheet of each, and then up to half of the pension can be used to make an equalization payment. So if somebody does, in fact, let's say that I am getting the pension, half of the pension, as an equalization payment, then what the law now says is, while I may get the asset out of the pension plan, it sits in the locked-in account until I'm age 55. So it is illiquid until I am age 55, even though I could buy a LIF in advance of that.
Okay, good. So that's basically, it requires some professional attention, and each situation is unique, and clearly it needs that. Last question on this. I know that annuities are something that are also legislated by the Pension Act, and they've sort of run in and out of favor. It seems that with lower interest rates, there's a lot of misconceptions, but one of the things you always talk about that you're a big proponent of is something called a copycat annuity. And we only have a minute on this, so I realize it probably requires a bit more information. But with low interest rates now, is it an appropriate time to buy an annuity? Is this true?
If I had money in the bank, then I would say low bond yields, will I buy the annuity? When I look at the commuted value with which I may be able to buy the annuity, if the plan allows, the low bond yields have pushed the commuted values sky high. So it's sideways movement, commuted value to copycat. So that's totally distinct, the decision doing that vis-a-vis looking at the money you might have in a bank account and saying, shall I buy an annuity?
Okay, good. So look at it. Clearly, there's a lot of moving parts on the pension area, and anybody who's listening, rather than just have somebody tell you what you should do and going ahead with it, I really do think it's very important that people look at all of their options, including annuities or copycat annuities, or looking at different ways to convert their pensions into more tax-efficient vehicles. So Leah is certainly one of those experts that can help you or help us with those questions. So Leah, thank you very much. And we'll come back to you with some additional questions as we go along.
Gladly.
Great. Now we save the best for last. And we've got Jeff Gottesman, who we're really happy to have. Jeff, we'd love to have your insights on the property and casualty and sort of liability world. We all have our car insurance and our house insurance and our boat insurance and cottage insurance and our knee insurance and all the rest of it. And Jeff is an expert in that area. So please give us an idea of how COVID has affected your business and your clients, and then we'll rapid fire you with some questions.
Thanks, Mark. And thanks to Brett and the Foundation for having me. It's an honor and humbling to be amongst such leaders in the community as well as in the insurance world. So thank you. So property and casualty insurance basically is comprised of what you mentioned, home and car insurance, as well as commercial insurance. And COVID, it was a really interesting time. We were actually out of town and came back, and I haven't had a face-to-face client meeting, since the end of February, but my cell phone at home hasn't stopped ringing. And the calls, it's kind of like, it's been cyclical. The beginning of COVID was panic. I'm going to lose my business. How am I going to keep my restaurant open? How am I going to keep my fitness studio open? How am I going to keep my dental office open? How am I going to pay for my car insurance? Can I pay my rent? It was just, I became almost a therapist. I could guide and counsel on the insurance, but, people were really, really scared. A lot of fear. And then that sort of, outside of the business interruption on the business side, once they were told that they had to close by the government, it was a bit of a lull. And then the last, I'd say probably 10-15 business days, it's been things are picking up. People are buying new cars, people are closing on new houses, people are buying jewelry, getting their boats in the water. So it's been an interesting time. Definitely getting to know clients a little bit better. Thank God so far, there haven't been many real casualties to business, at least in our in our office, like you had mentioned earlier, it's third generation. My late grandfather started when he came to Canada. I work for my uncle and aunt with my cousin now. So it's a family business. And I don't know if there's anything else you want to know about COVID or you have other questions, but
Absolutely. I've got other questions, and I'm sure it's on other people's minds as well. I'm part of all these WhatsApp groups in my community, and I love to speak to somebody who says, I'm saving 25% on my car insurance because my car is in the driveway, and I'm saving all this. Just call up your PNC guy. So I did that, Jeff, and I didn't get any discount. And I'm like, what are they talking about? So either I have the wrong advisor or I've got the best coverage. So what's going on?
Might be a bit of both. But basically, like David said with the life insurance companies, I think the PNC insurers did a remarkable job for the 16, 17 years I've been in the business. It's the first time they really did sort of a good PR campaign. I think once the banks came out with mortgage deferrals, there was a lot of pressure on them to say, okay, let's sort of take it easy. Let's see what we can do for premium relief. Cars aren't on the road as much, so our loss ratios won't be as high. People aren't going to, hotels and restaurants and all these other places. So slip and falls and, fires and things like that won't be as high. So, if we're taking in all this premium and not paying out as many claims, let's see what we can do for relief. And the interesting thing was, Ontario's finance minister, Rod Phillips, even came out and said, as Ontarians, we have to be so helpful and do whatever we can to help these businesses that hopefully once we get through to the other side of this, we'll be around. And he said, there will be punitive penalties, call it, for insurance companies that don't help and that don't provide relief. So, there's hundreds of PNC insurers in Ontario, and every company took a different stance. But by and large, most did, premium deferrals, no problem. We're not going to cancel you for non-payment if you can't pay your premium. Just call, have that conversation, waiving NSF fees for people bouncing, pre-authorized payments, things like that.
How long were the deferrals, Jeff? Or
very similar, kind of March 15th to July 1st, but also company dependent. And then on the commercial side, they're still working with on an individual company basis, so certain companies need a little bit more time or think, okay, we can ramp up in another month, call your advisor, speak to them, let them speak to the insurance company on your behalf and see what can be done. Things like that. The 75% or 20% that you'd mentioned with your neighbor, that was all of April. It was nonstop. I want to get 75% off, but I also want to drive my car. So people were parking their cars, but also wanted the discount. So for families that said, you know what, we have 2 cars, we really only need 1. Let's park a car. We'll put it in the driveway. We'll put away the keys. No one will drive it. Sure. You can get a pretty substantial discount for that. We had someone that said, hey, I'm going to do that, but I'm only going to move it from the driveway to the street every morning so the kids can play. My comment was, God forbid you hit a kid on a tricycle, or God forbid you hit something, there's no coverage. So once you walk people through it, sort of hold their hand and, help them through it, the people understood it, but the companies did provide, 15% discount, things of that nature. So they were,
well, it's good. It's
by and large, sorry.
Oh, go ahead. It's good that they have somebody like you to lean on, Jeff, because, it might be, 1 month's premium or a couple months premium, but that provides you peace of mind as opposed to being, penny wise, pound foolish.
Totally. And I think it was, people just have this thing with insurance companies. They're always just taking our money. I never claim. So even if it was, people that were fortunate enough to, be financially stable, it was like, all right, well, I'm getting some relief. And, I've paid all this in, and they were just happy to be on the receiving end for once.
Beautiful. It's free. People like free. We're all looking for a deal. So, but look there are a lot of people who really needed it, and then some others who just took advantage of it. It was a good opportunity for some people. So here's something that comes up. We're all working from home. At least I'm working in my office. I'm in a 7-story building, and I've been working here, and there's two cars in the entire parking lot. But a lot of people are working from home, and suddenly they're now conducting a business at home. They've got a business, it could be with, they're transacting and all that. So tell me, how does that affect people's home policies. Is there any liability there? Is there something that they should be doing to bump up or put a rider? Tell us about that.
That's a very good question, Mark. And I don't want to, high level, broad strokes. I'm not going to read a disclaimer like David, so I don't want anyone to run home and start running their business and run into a problem. But, there is something for incidental office use in most homeowners' comprehensive policy wordings. And that's typically, call it a paper office. So if you're, an accountant taking some work home, a lawyer, an insurance broker, not seeing clients in your office, there really isn't that much of a liability exposure. Maybe something on the cyber side, if you're worried about, confidentiality or getting hacked, things like that, where I think there's going to be a real niche for if going forward, offices don't function the way they formerly did and people do start working from home. But typically, if you're not seeing clients, it might be a good idea just to give your broker a heads up and say, hey, I'm working 100% from home. What should I do? If you start seeing clients, if you're running, a nail salon out of your house now because your salon's been closed, or you're going to people's houses to cut hair, whatever you're doing, fitness, things like that, I would definitely let them know, because your exposure has changed. And as long as the insurance companies know what the exposure is and what their risk is, they're pretty comfortable. And 90% of insurance employees on the company side are working from home, so they get it. The big thing that struck us on the liability side for people being home is like the fun stuff. We've been fielding a ton of calls for people that are saying, you know what, I can't send my kids to camp, so I'm buying an above ground pool, or we're putting in a pool, or we're going to adopt a pet, or trampolines are a big one. Those things, I say, for sure, call your broker, have that conversation, make sure that's in writing, that they know what you're doing. Because you don't want, that phone call coming in and saying, hey, my basement's flooded because we put in this above ground pool. And they're like, well, we never underwrote that. And the insurance company didn't know what they were on the hook for.
Jeff, you got me a little nervous because we picked up a couple of little ducks from a farmer in Peterborough to babysit for 3 weeks, and we've got one of the heat lamps on. Maybe I should be calling my P&C broker to say that I've got little ducks, and, we might running, they might think it's a meth lab or something like that with all the extra, electricity being used. But 2 more questions and then we'll continue. So one of them is, look, we all say, it seems like auto rates and home rates just keep going up and up and up every year. We haven't had a claim. We got 6-star, 7-star, 12-star, whatever it is. And yet it seems to keep going up and up. Now, the question is, will COVID, the fact that people are driving less accidents, is COVID going to make it better or worse in terms of the impact on rates going forward?
Yeah, that's a good one, Mark. I like that question.
Well, I think you gave that question to me, Jeff, so that's why it's a good question.
If I had a crystal ball, I probably wouldn't be here. But it's hard to say. Like I said, insurance companies operate on loss ratios. So they say, every dollar we take in premium, we can only pay out, call it 80 cents. And every company's different, and their shareholders or, everyone's answers are different on what that number is, and that pays their expenses, that pays their overhead, their offices, their brokers, things like that. With less accidents on the road cause auto rates to go down, sure. But the problem is, even with COVID and driving now, we're not seeing a decrease in frequency. And the problem is the severity of claims as well. So where, 5-6 years ago, someone gets rear-ended at a stop sign, they go to their body shop, they get it fixed up, it's $400 go. Now with cameras and sensors and everything that's going into these bumpers or car parts, you're now $4,000. So the insurance companies are saying, hey, and frequency isn't going down. These cameras and sensors aren't causing people to have less accidents, but the cost to fix these cars is going through the roof. So we need to make some money. COVID itself, intact, they're expecting, and they've marked a reserve of about $80 million for COVID claims. To put that into perspective, they paid close to $8 billion in claims last year.
Amazing.
So it's a massive amount. They're saying 1% will be from the business interruption side. The rest is likely just from liability claims.
So Jeff, if our rates don't go down, should we be calling you? Is that what it comes down to?
Yeah, I would call you.
Call a broker or give you a call. Okay. Just because your silo affects so many of us, just want to ask you one more question, and then we'll go back to the questions that our audience. And please, if anybody has a question, go to the chat portion on the webinar, type in your question and we'll get to it. But when businesses reopen, as you know, we're seeing these different phases going along, what should people do now going forward to protect themselves from a second wave or another pandemic? It's like this took everybody by surprise. Nobody in our entire history, you know, has ever gone through something like this.
Sure. Another great question.
Yes, Jeff, a good question.
You know, again, have that conversation with your broker. Has your business changed? Have your revenues changed? Have your projections changed? Has your business model changed? You know, were you a restaurant that's now only doing takeout? Things like that. I'd also look into, you know, cyber. If you're, you know, are your employees working from home? If you're a law firm, you know, what's that going to look like? As far as reopening, yeah, just have those questions with your broker, have those conversations and see what wordings you have. What are your policy wordings? Do they exclude pandemic? Do they exclude infectious disease? What would it cost to add those coverages in if they're available for your business? And just have those questions. Use your broker. They're your friend.
Yeah, a good idea. And I recommend to all my clients, I said, look, it's always important to get a second opinion and somebody who can actually give an interpretation of all the small print, because you don't want to surprise and not know what you don't have at that time. And it's better to know now. So by all means, speak to Jeff if you're looking for a second opinion on your coverage, or go to your broker as well. Just thank you, Jeff. That was great. And what we'd like to do right now is just answer some questions that have come in from our studio audience. And the first question we'll ask for David Brown, although it's not a COVID question, it's definitely something that's been on everybody's mind, which is with regards to the whole trafficking of a life insurance policy issue that the BC insurers had put out, and now apparently came back and have said a situation where it is not considered trafficking of life insurance. David, can you just give us a minute or so on that? I definitely think it's something that people should know about.
So this is an ongoing situation right now, and we are actually, we as the industry and people involved in the industry are in discussions right now with the regulatory body in BC. If you go to the BC website and the regulatory body's website, you'll see the recent release that they came out with, which provided some clarity as far as what they actually meant when they came out with the original letter that dealt with sort of trafficking. There is a work group that involves several community organizations, including the Canadian Association of Gift Planners and including the Conference of Advanced Life Underwriters, that are meeting with BC in order just to get clarity. We wanted to get clarity because we want to make sure that this doesn't extend beyond the the BC regulatory body, but the issues that are there still do not really say to us that we shouldn't be promoting the use of life insurance as a viable and as a good charitable gift. They're just concerned with who is doing the promoting, and that the individuals who are doing the promoting of this strategy are knowledgeable in the product and knowledgeable in the strategy and in the process. So they want to make sure that it's not the charities themselves that are doing this, but that there are advisors working together with the charities.
Beautiful. I like to say that actually what happened in BC was one of the best things that ever happened to the charitable insurance industry, because it made people get all upset. And for the first time, they realized you could actually use insurance for charities. So I think there was a positive thing that came out of it, even in the negative. And I like a happy ending, which is great. So what I'd like to do right now is, because we don't have a lot of time, I'd just like to sort of wrap things up. Maybe each of us can go around, just spend 30 seconds, 1 minute, just sort of giving sort of your advice to this, a steered listening audience on what they should know about, or going forward, how they can protect themselves and their clients going forward, just around the industry, and what would be your parting remarks in terms of advice to them. So why don't we go backwards? Jeff, we'll start with you. Do you want to just give us a 30-second wrap up?
Sure. Yeah. Basically talk to your broker. Use your broker. Lean on your broker. They're there for you if you have questions, whether it's payments, whether it's coverage, exclusions, wordings, whatever it is. Other than that, stay safe, wash your hands, and just be safe.
Excellent. Thank you. Leah. Leah, we lost you. She's on mute. Somebody has to unmute her. Leah, you're still on. There
Okay.
you go. Go for it.
What we need to give, and I think what COVID has had us do, is give thought to longevity. How long might each of us live if COVID does not get us? And a pension is savings. It's an asset that will get you to the end. So we all need to focus on not just pensions, but savings and doing the planning that will get us to the end of the day.
Beautiful. Very, very good advice. And David Brown, David, you have the final hammer blow.
Okay, so the Life Insurance Marketing Research Association, LIMRA, just came out with a report. And they basically sent a survey to 47 insurance companies in the United States and 12 in Canada to ask them what was happening these days with reference to their approach and the number of applications that they're seeing. And what has come to light is there's actually an increase in the amount of insurance applications that are being applied for, that are being approved for right now. And it's just the methods are different. We're using more technology. As Mark mentioned before, the companies have become a little bit more lax in their underwriting because they understand how difficult it is to get medical information these days. So my one piece that I would like to encourage you is that if you were in the midst of working on an estate plan, if you were in the midst of designing a charitable gift using insurance or leaving as a bequest, if you were in the midst of thinking about the future of your family, not to let this pandemic take you off the path, that no matter what's happening today, you're looking for protection of your family for the rest of their lives. And I'd encourage you to call your advisors and to speak to them about continuing on that process.
Very wise advice. It reminds me as we wrap up some important advice that one of my rabbis told me, and he said that you sort of have to have the 3 Ps. The first P is you have to remain positive. Let's focus about all the blessings in our life, not focusing on the things we don't have or we can't do. Second P is persistence. We still have to persist in doing the things that we can do. And during a pandemic, and during the time when we're such more aware of our mortality, these are the times to be taking care of all of those incompletions. So don't put that off. And the third P is we have to be patient. This too shall pass, as other challenges have passed before. And I believe if we get through those 3 Ps, it'll help to bring out our true potential, which I really give everybody on this call the blessing that we should be able to achieve in our professional and personal lives. I think this wraps up the evening. It's 9:01. We're pretty good. I realize I don't have a German background to get us out of here by 9, but I want to thank the esteemed panel. Thank you, Jeff, for bringing down our median age as well. We really appreciate that. And I want to thank everybody for joining us tonight. As Leonard Abramsky mentioned earlier in his opening remarks this evening, if you are able, please consider supporting our community this year. To do so, please visit jewishtoronto.com/donate. A link has been provided in the chat. More than ever, we need to be helping our community. Costs have gone up, funding has gone down, and it's really important for the haves to be able to support our community as we have done so much in the past. So I just want to thank everybody again for joining us tonight. Wish everybody a good night, and everybody should have a great long Wednesday weekend. And stay healthy, stay safe. And if we can help you with any of your questions, please reach out to David, to Leah, to Jeff, or to myself, and we'd love to be able to help you. But do one thing, don't ignore it. Take care of it while the sun is shining. That's the message. Thanks everybody very much, and have a wonderful night.